Welcome back to Nomad Margins. This is week 12. If you have been following this channel for the last 3 months, you know we have documented every single high, every single low, and every major tactical pivot. But today, we are talking about a total strategy overhaul, a massive market slaughter, and the reality of using a small portfolio to cover real-world living expenses. Let us look at the headline numbers right out of the gate. The portfolio is sitting at a total value of $1,285.05. If you watched week 11, you know we were sitting on a beautiful balance above $2,000. But this week, the strategy changed completely, and today, the broader market took an absolute, unmitigated beating. During regular trading hours, our account took a massive hit, dropping $677.87, or a brutal 34.54% down in a single day. When you see a third of your account value vanish in 8 hours, most people panic. But as a digital nomad, you do not have the luxury of panicking. You have to react mathematically. The market was a bloodbath today, and my active positions were heavily threatened. To save the portfolio from total destruction, I had to actively roll my options out in time and in on strikes, managing the risk dynamically to fight another day. We are going to break down exactly how those defensive rolls work in just a moment. But first, we have to talk about the massive structural change I made this week. I officially sold 100% of our remaining stock and equity holdings. VUG, GLD, and Waste Management are gone. We are now completely all in on options. Why did I do this? It comes down to a very cold, hard financial reality. When you are managing a smaller capital stack under $2,000, waiting on traditional dividends to fund your lifestyle is an absolute pipe dream. If I kept holding a traditional mix of growth and dividend ETFs, I would have to wait 10, 15, or 20 years before the passive payout could even look at a single household bill. But because of our recent options acceleration, going from $15 a week to over $100 a week, I realized this capital can be put to work immediately. This week, thanks entirely to the premium generated from our options engine, I was actually able to withdraw money from this small account to pay some real-world bills. That is the ultimate proof of concept for the nomad lifestyle. We are converting a tiny capital base into an active income stream that pays for survival right now, not decades in the future. However, being all in on options means you take on the full velocity of market volatility. With no stock cushions left, our buying power and margin numbers are incredibly tight. Our total available buying power is sitting at $1,281.33, backed by $481.33 in cash and an $800.00 margin limit. Because we are running active spreads, we have $600 fully locked up in options collateral. If we jump into our margin health dashboard, you can see the absolute tightrope we are walking because of today's market drop. Our total maintenance requirement is sitting at $603.72. With our equity at $1,285.05, our equity buffer is exactly $681.33 above our absolute minimums. Robinhood is currently classifying our margin health as medium risk. It is a massive step down from the invincibility we felt last week, but given that we just survived a $677 daily drop, the structural integrity of the spreads held up because of our rapid defensive adjustments. Let us look at the active trade log to see how we handled the bloodshed. We came into the day with our core QQQ put credit spreads threatened by the massive tech sell-off. Instead of sitting on my hands and letting the contracts expire deep in the money for a maximum loss, I executed a series of defensive rolls. Rolling means I bought back our current expiring spreads for a loss, but simultaneously sold new spreads further out in time and at lower, safer strike prices for a credit. By doing this, I extended our clock, gave the market room to breathe, and preserved our collateral so we can reclaim the capital as the market stabilizes. Week 12 was a trial by fire. We transitioned entirely to an options-driven income model, used our premium to pay real-world bills, and stared down a devastating $677 daily drop. The old Core 5 is gone, the equity safety net is gone, and we are now purely relying on our cash management and premium collection skills to scale this machine back up. This is what real risk management looks like when the cameras are rolling. If you want to see the exact strike prices of my new rolled positions and track how I navigate this medium risk margin status back to safety, follow my live portfolio updates on Blossom Social at Nomad Margins. Question of the week. When the market experiences a total bloodbath and drops your account by 34% in a single day, do you have the emotional discipline to sit down and roll your positions defensively, or do you find yourself wanting to close everything out and walk away? Let me know your survival strategy in the comments below. I am your host, this is Nomad Margins. Respect the leverage, manage the rolls, and I will see you right here for week 13.